Something very unusual is happening behind the scenes of global finance right now. The world's largest banks are quietly preparing for a settlement system that almost no one is talking about on mainstream media. There are no press conferences, no breaking alerts on CNBC, and no official announcements from central banks. But the signals are everywhere if you know where to look. Payment rails are being tested, legacy systems are being questioned, and one digital asset keeps appearing again and again in private documents, pilot programs, and closed-door discussions. That asset is XRP. What you're about to hear is not hype, it's not speculation, and it's not a price prediction. This is about global money infrastructure changing in real time, and most people won't realize it until it's already done. Before we go any further, take 1 second to pause. If you care about how money really moves, not the headlines, but the plumbing underneath the system, then this video is for you. And if you appreciate calm factor-based breakdowns like this, make sure you like the video and subscribe to Global Money. Decode right now, because once these changes become obvious to everyone, it will already be too late to learn them from scratch. Now, let's talk about why global banks are preparing in silence, and why they don't want retail investors paying attention yet. For decades, international money transfers have relied on a system that is slow, expensive, and outdated. Cross-border settlements can take days. Liquidity gets trapped in different countries. Banks are forced to pre-fund accounts around the world just to move money efficiently. This system worked in the past, but today it's cracking under the pressure of global debt, instant digital commerce, and rising geopolitical tension. Want to know something most people miss about banks? They don't innovate with big, splashy announcements. They prepare quietly. They test things behind closed doors, and they only go public when a new system is already mature and pretty much unavoidable. Guess what's happening right now? Many of the world's biggest financial institutions are running pilots and simulations. They're focusing on things like instant settlement, real-time liquidity, and transferring value using tokens. And when you cut through all the jargon, you find one core need repeating over and over. They need a neutral, fast, liquid asset that can move money across borders without any friction. This is exactly the problem XRP was designed to solve. There's a common myth that XRP is trying to replace banks. That's just not true. Banks aren't afraid of XRP. In many cases, they're actively building systems that could use it. The real issue XRP tackles is liquidity. Think about it. When a bank in the US needs to send money to a bank in Asia, they don't want to wait 3 days for the transfer to clear. They don't want to tie up huge amounts of capital in the process. They want it to be instant, with minimal risk and low cost. The old systems, like SWIFT, were never built for this kind of speed. But XRP was. What makes this moment so critical is the timing. Global debt is at an all-time high. Bond markets are feeling the pressure. Central banks are trying to balance fighting inflation without causing a recession. At the very same time, governments are seriously exploring digital currencies, tokenizing real-world assets, and creating new layers for financial settlement. All of these massive trends are starting to converge. And when powerful systems converge like this, the underlying infrastructure becomes far more important than short-term speculation. It's the rails the new financial world will run on that truly matter. Thanks for watching. Don't forget to like and subscribe for more insights. Behind closed doors, banks are asking very specific questions. How do we move large amounts of value instantly without relying on a single country's currency? How do we reduce counterparty risk? How do we operate 24/7 instead of banking hours? And how do we do all of this while staying compliant? XRP was designed with these exact questions in mind, which is why it keeps showing up in conversations that never reach the public. This is also why the silence matters. If banks openly announced that they are shifting toward an XRP-based settlement layer, markets would react instantly. Liquidity would move too fast. Volatility would spike, and regulators would be forced to comment before frameworks are fully ready. So instead, preparation happens quietly, step by step, pilot by pilot. Think about this. When the internet was being built, most people had no idea what TCP/IP was. When electronic trading replaced floor trading, it didn't happen overnight. Infrastructure always changes first. Awareness comes later. Wealth usually moves in between those two phases. On Global Money Decode, we don't chase hype. We look at structure, and structurally, global finance is signaling that the old settlement model is nearing its limits. Even central banks are now talking about instant settlement and interoperability. Tokenization of real-world assets is no longer a theory. It's being tested right now, and tokenized assets require tokenized liquidity. This is where many investors get distracted by price charts and miss the bigger picture. XRP's real value proposition is not retail payments or speculation. It's acting as a bridge in a multi-currency, multi-asset world. A world where money needs to move as fast as information. Banks understand this deeply, even if they never say it out loud. Another key point people overlook is regulation. Contrary to popular belief, regulatory clarity does not slow adoption. It enables it. Banks don't move until rules are clear. Once their movement happens fast. Very fast. That's why so much preparation happens before any official green light. When the switch flips, the system needs to be ready instantly. This also explains why the next financial crisis won't look like 2008. In 2008, liquidity froze. In the next crisis, liquidity will try to move instantly. Systems that can't handle speed will fail. Systems designed for real-time settlement will survive. Banks know this, governments know this, and they are positioning accordingly. Now ask yourself a simple question. If XRP was irrelevant, would global institutions spend years testing, integrating, and discussing it, or would they ignore it completely? Financial institutions don't waste time. They follow incentives. And right now, the incentive is efficiency, speed, and global interoperability. Most people will only notice this shift when headlines suddenly change. When banks announce new instant settlement networks or tokenized liquidity platforms, XRP may not even be mentioned by name in those announcements, but the infrastructure will already be there, working quietly in the background. This is why understanding the mechanics matters more than chasing narratives. Whether someone loves or hates XRP is irrelevant. What matters is whether it solves a real problem at scale. And the fact that global banks are preparing tells you everything you need to know. As we get closer to the end of this video, I want to hear from you. Do you think banks will publicly acknowledge XRP's role, or will it stay hidden behind technical language and partnerships? Drop your thoughts in the comments. Your perspective helps shape future videos on Global Money Decode, and I read far more comments than you might expect. If you found this breakdown valuable, share this video with someone who still thinks global finance never changes. Sometimes one conversation is enough to open someone's eyes. And make sure you resubscribe because the next phase of this story is not about price. It's about infrastructure becoming visible. When that happens, the quiet preparation will suddenly make sense.